Hi guys, welcome back to another important video. In this video, what we're going to do is we're going to connect the market structure with some unusual activity in the options of December month. We are also going to find the range for next month using this option activity. Also, we want to understand the strategy of the big players, what they can do for the next month. So let me just reveal the unusual activity first. On the 20th of November, this is the 20th of November candle, green color candle. What did I see? I saw that 27,000 to 27,200. Here, the call options of December month end, they were aggressively being bought. Buying was happening. Now, I don't know why. We will find out in this video using some OI analysis. Then on the next day, this is the Friday. What did I see again? 25,000 to 25,200. Put option of same December month was being bought. Someone was buying it. Now, what is the logic of buying both upside 1,000 points distance and downside 1,000 points distance? This is what we want to crack in this video. In this video, I'm going to discuss some OI analysis, which I never do. It's something new for many of you. Some people have already deep knowledge of option chain and OI analysis. But in this video, I hope you learn something new. We're going to connect this with the market structure. Now, the first thing you need are tools. You need some certain tools to analyze the OI. Here, we are using Sensible. Sensible, again, this is not a paid advertisement or something. This is what I use. That's why I'm sharing this. If you don't know how to use this, if you have never heard about it, if you want a free account, just check the previous video. I have shared one of the videos where you can create a free demo account. What I'm going to do right now is I'm going to go to this Analyze tab. I'm going to click here, and then I'm going to the Open Interest part. When I click the Open Interest, something like this opens, and I'm going to the Open Interest here. All right, this is what I want to see. Now what I have to change, I have to change the date of the contract. Right, I have to select that. Now this is the current date. This is fine. I have selected already 30th December. I have selected the strike price range from 24,500 to 27,500. So this will display all the OIs between this range. Simple, nothing complicated here. Now let's quickly look at this chart. Let me zoom in and see if I can zoom in. Yeah, I can zoom in. What we're going to see here is very simple. This spike, this is again Friday closing is done. This spike here is 26K. Call option and put option. Okay, the green color we know is your put option. The red color is call option. So this is CE. The green color is PE. Okay, here what do we see? Basically, what do we see? Just normal analysis. We see that around 25,000 put option, 25K PE. There's a strike, which is a spike here. There's a spike here. 25.5K PE, there's a spike. Okay, clear. Here 26.5K, 26.5K is 26,500. Call option. This is a spike here, 27K. Call option, there's a spike. Okay, this is the general idea we have so far by looking at the open interest. Please, my humble request, never take the open interest currently and go and mark support and resistance. This is the basic mistake all retailers make. So don't mark support and resistance based on OI. It will change every day. All right, it will change every day. Don't make this amateur mistake. Don't mark support and resistance. What do we have now? We have one important clue. What is a clue? I'll tell you again how we'll connect that here. If you look at the open interest chart, you can never find out whether buying has happened or selling. This is just telling you the number of contracts. That's all. Open interest is only telling you number of contracts. It is not telling you buying and selling. So the unusual activity we had from my own private volume analysis research, what did I tell you? That this we found out some buying is happening on 25K. Okay, we found out that buying is happening. And same thing, we have the knowledge that 27,000 buying is happening. So generally what happens is when there's a spike in OI, people consider that big players have done option writing, meaning option selling. They're writing the option selling. This is the general idea which everyone follows. But we know for sure that buying has happened here. Some kind of buying activity has happened. So now what we're going to do, very simple. I'm going to break it down. We are going to connect some strategies with this analysis. We are going to connect some strategies with this analysis. How? So first thing we know, somebody has done buying here. 25K CE buy. 27K CE buy. Simple. It's not complicated at all. This is, so far we know this. If this is 26,000, this spike in OI, it's not even, there are a few days left for your November month expiry. It is not yet over, but still there's such a huge buildup. How much buildup? This is nearly, you can see OI, put OI 63 lakh, call OI is 49 lakh. It's heavy buildup already. So the first strategy, what comes to my mind, it is very common. I think all the big players definitely follow this. What they do is, let me zoom out. We'll go to a strategy builder in the same sensible. You see the trade option on top. Here there's something called strategy builder. Okay, we click that. We come to this page. What I'm going to do right now is I'm going to build a new custom strategy. What are the strategies involved here? Bullish, bearish, neutral. There are other different kind of strategies. You already know that. I hope you have some basic knowledge of different strategies in the market. Right now, what we're going to do is, from our information so far, we saw we need to apply these strikes, 25K, okay, 25K, 27K, and 26K. So the most common idea I get from this is that somebody is creating an iron fly when I have at 26,000 of December month. So this 25th November, I have to change it to 30th December month end. Okay, I have the option chain now. So first thing, we'll buy one lot, 27,000, because we know 27,000 someone was buying, call option. Now 25,500, we are buying one lot. We know that somebody was buying. Now, because of this spike in between, I get the idea that someone is creating an iron fly for the month of December. This is one of the most common strategies. Simple. So far it's clear. We have created an iron fly based on the knowledge we have. Done. Now, question is, what do we do with this information? If a big player is creating an iron fly based on this, he knows most likely the range of your market. He is expecting market to go any side like this, up or down, and it'll come back to 26,000 again. So he's expecting mean reversion to happen in the market. Simple. This is the basic logic. Now, what is the range, break-even range? We'll take the range here. We'll try to apply something new. This is the something new part which I'm teaching you here. The range here, break-even range is 25,381 on the downside and 26,619. So keep in mind, we have applied first iron fly strategy. Okay, this is one of the strategy, iron fly. Here, if the market closes exactly at 26,000 in December month, you will make a profit of 46,000 rupees using a capital of 1.6K. 1.6 lakh, sorry, not 6K, 1.6 lakh. Okay, this is a very good risk reward. 1:6 almost, sorry, 1.6 almost. It's a very, sorry, not 1.6. It can't be 1.6, less than 1.6. But point here is that it's a very, very good risk reward, but we can't guarantee that market will exactly close at 26K. So we have a range. What we're going to do is we are going to draw this range in our chart. Okay, we still have not yet discussed market structure. First, we'll draw this range in our chart. The upper range was 26,690. Let me just check it again. 19. Okay. Let's draw that first. 619. 26,619. Let's make it clear. 26,619. Okay, upper range. Now lower range, what did we get of the break-even range? 25,381. 25,381. Okay. So what we have done first thing is we have taken the range of this green part only. Of this green part. We have tried to identify the structure. We have tried to identify, the strategy they can use. We have taken the safe range first. Okay, the break-even range, we have taken it. Now, next part. Next, when I go back to this open interest, what do I see here? If you look at the strategy, one call option bought, one call option sold. Clear? Same thing, one put option bought, one put option sold. So the number of call options and the number of put options sold are same. So one CE buy, same as one CE sold. There is no uneven trade here. One buy, one sell. Okay, so far clear. If I go back to the open interest, what do I see here? If 27,000 call option is simply bought, if they're simply buying only 27,000 call option, so here call OI is 62.69 lakh. Okay, the call OI here is 62.69 lakh on 27,000 call option of December month. But on 26,000, it's only 49.5. You understand? There is a difference. So I'll just mark it here for your better benefit. 26,000 call option, 26K CE is 49 lakh. Here 27,600 is 69 lakh. What did we understand? Number of trades, number of contracts, that it is uneven now. We wanted, suppose they're creating one strangle here. This is a different kind of analysis. If you're creating a strangle here, you see, again, one call option, so one put option. So if this is one contract, if you're taking only the call side now, okay? If you're taking only call side, let me delete this. Okay. If you're taking only call side, if this is one contract, there is an uneven balance of contracts. Okay. There is an uneven balance of contracts. It is not the same strategy. So somebody else is making another strategy at this point. There are different strategies at play, not a single strategy. It's very, very clear. Okay. Very, very clear that there are different strategies. So what we're going to do is, first range we have identified using Ironfly, we will remove the hedges. We will remove the hedges and we will create a short strangle at 26,000. So what we are expecting is some players are taking hedge. Some players are taking hedge. Some players are taking no hedge in the market. They're simply directly taking naked shorts at 26,000. Okay. This is the second type of strategy they can use. This is a very common, it's simply because there's a very big spike in between. So what we're going to do now is same thing. We have taken a short position, short strangle here, straddle at this point. Okay. Very, very simple, nothing complicated. If you check out the neutral strategies, this is a short straddle. Okay. We have taken this at 26,000 call option, put option. Now we have taken this. What is the range we get? We get the range of 26,200, 25,200 to 26,780. This is basically 100 points away from the previous strategy we took. 100 points away, 100 points distance. Okay. This is 280, 25, 280. Let me just check once. 216. Okay. I'll take 216 instead. Right, 216, 150 points, 170 points distance on the upside. 26,784. 784. 26,784. So we have made a small range for the next month. Why I'm taking this range? is because, like I said, we have a spike in between. We have taken a short strangle naked, found the break even point. We have found using the hedges also. Same, not complicated at all. What are we going to do now? Now, what we're going to do is we are going to connect this idea, the range, with market structure and time analysis. Simple. All right. Watch. What did we discuss so far in the long term video, also in the long term view of Nifty, where we discussed the structure till December? We know that based on this pattern, of expanding diagonal, whether Nifty travels, makes a fake high, or it goes even further like this, in the future 25,153 level has to come back. So far this has to be clear, because I've repeated this almost in many videos, using even the long term video and the weekly analysis video. I've told this many times. This pattern tells us that in future 25,153 has to come back and retest. It does not matter if market goes to 27,000 also. Does not matter. This level will come back to test once. We know that. Now question is whether it will come in the month of December itself or whether it will come in the month of Jan. We don't know this. We don't know this. How do we prepare now? We have one of my special again researchers, time analysis. We have discussed time analysis in the time cycle videos already. I have shared these dates three months in advance, so you can check those videos. Here we have a major cycle starting from 4th of December to 10th of December. Now, what is the use of major cycle? Simple. I've told you in a simple method that we are expecting a 500 to 800 point move to start from your major cycle time zone. So here 4th December to 10th December. Okay. So here previous major cycle, you see it has started a fall. Some people can say, sir, the major cycle just ended. After 6th November, we got a big rally also. Does not matter which one you want to consider, but we have got more than 500 to 800 points move. This is our requirement. It is completed. Now, same thing, 4th to 10th December is going to start now. So we know that this area we are expecting a directional move in the market. Let us go back to your market structure now. Here we have to find out at that time, 4th, let me just draw it here, 4th to 10th. 4th to 10th. Okay, so 4th to 10th, the question here is, we know that directional move is going to start. Simple, what do we have to do? Find out where the market is standing. Is it going on the upside or is it on the downside? So from here, we can look for an opposite direction trade. Simple logic, not complicated at all. Now, if you looked at the strategy of these big players, what have they done? They have taken, so far in our analysis, they have short strangle, most likely. Sorry, short straddle they have taken, and they have created an iron fly. Very simple. That is matching with our analysis also, the range, because what we want is one direction move to catch. Simple as that. If we can copy the exact same strategy of the big players like this, they're trying to capture this range. So if the market is down, it will come back here. What we can do, I'll give you a new idea. I can't tell you to trade. What I am planning to do is very simple. I want to go with one-sided move, one range. I want to catch one side of the range. If it is not possible to catch every swing, if you can catch every swing, you are better than Warren Buffett also. Right now, I'm telling you, it is better to wait for one of the directions. Let us wait for this time zone and then watch for a mean reversion trade. If it is making a top, even better for us. Whether it's making a lower high or a higher high and then reversing, we don't know this yet. We have to check the market structure at that time. If this bearish trigger comes, our lower target is very deep. We know the range on the bottom side. Simple. Now, first case scenario, I'll tell you, first plan, what I'm going to look at is if the market is on top. If market is on top between the time zone of 4th to 10th December, what I'm going to do is very, very simple strategy. I am going to create an iron fly at 25,500. Okay. So I'm just telling you an example, 25,500, call option short, put option short, and take hedge of 26,000 CE buy. I'm just showing you, I'll show you in the chart also, and 25,000 PE buy. With this, I am going to take a call option naked short, any call option above this range, because what we're expecting is price to come back down, right, to trigger a 500 to 800 point move in the market. Simple. This is the easy way. I'll show it to you in the strategy builder. Clear? So far, this case, if the market is on top, what I said, short iron fly at 25,500. So call option sold of 25,000, put option sold. Here, what I'm doing is I'm creating the hedges of 26,000 and 25,500. This is over. First part is over. Now what I'm doing is, I'll show you. We have made the iron fly, IF iron fly at 25,000 of December month end. Simple. Now what I'm doing is I'm creating a extra short because I know market is going to fall. I know market is going to fall from here if the market is at the top here, if it's making a higher at this point in the time zone. So I'm going to short the call option above this range. This is 26,700, approximately 800. So let me take 27,000, just round figure, because we already know that there is a huge open interest here. So let me take 27,000 round figure here. Done. So this is one of the strategies we can apply. Here you see that my loss is not there. If the price even goes to 27,000, I'll have no loss. If it comes back towards 25,000 or 26,000, then reversal happens. Easy catch for me. I can make a lot of money, risk free, not completely risk free. In some way, it is very simple trade. Okay, it's a very simple trade. That is what I've done here. Now, question here is, what if it is at the bottom? Same thing we can do. What if price is at the bottom here and we get a 500 to 800 point rally? What happens then? Exact same thing. We can create 26,500 iron fly and short one of the put options here. Same thing, exact opposite I'm going to do. What we'll do is we'll just build this exact opposite one. 26,500 iron fly, hedges 27,000 and 27,000, 26,000. Done. Now what we have to do is put option we have to sell. So which put option do we sell? This is 400, 24,000, 25,400, 25,200. So below this range, we have 25,000. We'll take this round figure. I can keep adjusting that also. Okay, it looks like this. So maximum loss I have here, if sudden fall also comes, will be up to 25,000. And obviously we're trying to catch the bottom, so we can keep adjusting the put option. 3,800 is my maximum loss. Okay, that if I keep adjusting now, if I remove this and if I change it, if I want to make it green, I can move it up. Okay, now the maximum loss is 2,300. I can keep moving it up. Okay, 1,300. Okay, now this is fine. This is not much. It's almost dead. So we have caught a swing low here, waited for price to bounce, and anywhere if the market closes above 26,000, it is going to be a profitable trade. Okay, so this is what we are expecting in the market, and one of the way you can make a strategy like this. Now, this is not all. I'll give you a quick, simple, another idea which I have in the mind. You know this double plateau strategy. Have you heard about this? It's very simple. It's just like your Batman, but again, double plateau, two different strangles or iron condors, two different iron condors. Here, what I'll do is I will create half of the side, one side only, one side of the condor. How? I'll show it to you. Very simple. It's not complicated at all. What is the logic behind it? Again, the logic is uneven call option and put option writing. It's uneven little bit. So maybe there are two call options sell here, yep, or two put options buy, right? Twice the quantity. There's only one quantity. But if you see exactly, it is not the same. OI is a little bit different. Again, we don't know number of trades. We don't know if they're selling or buying. Based on my own volume research, I have some idea that somebody is buying here. So this can act as a hedge in the market. Most likely, this is a hedge. So what we're going to do is I'm going to show you this double plateau, half of it. And this idea is very simple. I can capture a single direction move till here, wherever the market goes. And then if the market turns, I can catch the reversal side also. Okay. So what I'm going to do is I'm going to create a half. Now half, which one should I follow? This is 26,000 level. If my expectation is price is going higher based on the market structure in the next few days, I will create the upper side. Okay. I will create the upper side half. If market breaks down the 26,000, those who are following the weekly analysis regularly, you know that if the market breaks down here, I will create the lower half. Till when? Till here. After that, I can readjust my position till your time zone starts. Okay. So what is that half? Let me tell you. It's very simple. What I'm going to do is I am going to buy 26,000 put option. I'm going to sell 25,000 put option, 25,500, and also 25,000 put option. So what does this look like? Double plateau, but only half side, lower half side. What have I done here? Simple. 26,000 put option buy, 25,500 sell, put option 25,000 put option sell. So what does this tell me? It tells me that does not matter if wherever the market goes, if market is going to come back in this range, I will make some money. Simple. I will make some money. So this logic is for what? If market drops, in this time zone, I will, which part of the strategy will give me profit? I'll show you. Very simple. We have this, right? This is one of the bear put spread. This will give me profit if the market is falling down. Mostly your put option will give you profit. So when the market falls down towards 4th or 10th, the time zone, and suppose market reverses rally, in that case, we can book off the put option. You can book this also if you want. You can book this and leave this open. You can leave the put option naked sell open. It will come back to positive territory, or you can add more put options later on. Simple. So the bearish part you have booked, the trending part you have booked, and you have placed it for the reversal setup. Simple. It's very, very simple. Nothing complicated here. I'm just telling you future adjustments in advance. Okay. Now, same thing if the market goes upside. If the market from here, it goes upside. And then I'm creating a upper half trade. When this trending move is finished and market starts to fall down, I will book the upper call option buy. I will book this buying position. I will leave the sell position open. So I can catch the reversal side also. This is very, very simple. Nothing complicated. I'll show you how to do it here. Go back to the strategy builder, fresh positions, buy your 26,500 sell, 27,500, 77,000 sell. So what is this logic here? From 26,000, if price goes up towards the time zone, we will make some money in what? In the buying side. Okay. Buying side will give you profit. You can take a bull call spread also here. That will give you profit. Okay. Now, after the time zone, if market reverses back on the downside, just book off this position. And then if you feel that, okay, market is going to sustain about 26,000, you don't need to touch the strategy. It will normally give you profit of 24,000, 25,000, nearly 2 lakh capital has been used. Okay. So it's very simple. Nothing complicated here. Let the market decide the path. So from this time zone, if market reverses downside, I can book the bullish side and let the bearish side trade, it will trigger a nice reversal. I can add more also to the bearish side. For me, it will become very, very easy to do. Some people are advanced. They'll say, sir, I can wait. I don't need to add this bearish position. I can wait for the market to go up. Correct? This will be a normal bull call spread. And then I can short the market later on. When the market is higher, for a good price, I can short the market. Yes, but that requires a little bit more skill and your conviction. Okay, that is more important. So far, I have shown you how did we get the levels using our OI. We try to find out what the operators are trying to do, and basically everything depends on your reading of the market structure. You can create 10,000 strategies, does not matter. Your market structure reading has to be on point, or just wait for the market to show the path. Don't be in a hurry. There's no hurry yet to make money. If you can't make 24,000, you will make 23,000 profit. Just wait for your market to show the path. Don't worry about maximum profit. Think about safe method first. Okay. So far, I hope you have learned something new, guys. I'll see you in another video. If you want these kind of videos every month before the next monthly expiry starts, I'll give you more ideas of how the operators are moving, how you can study. First thing you must learn is, does not matter what strategy you use, you have to learn the market structure. That is extremely, extremely important. Okay. So connect with me, connect with the group here. We have the YouTube channel. Study the premium study material which is shared there. Try to understand the market structure as soon as possible. Okay, that will help you to decide which strategy to use. I'll see you in another video. I hope you like this video. I hope you learned something new. Definitely do leave a comment or a like. I'll see you in the next one. Till then, take care and be safe.